Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a great and amazing day today. So guys, we have a very special article here that I want to talk about. It's by CNBC. We're going to be breaking down what's going on with the real estate market and giving you guys my opinion about it. So let's jump into it. Like, subscribe, do what you guys do. So let's just jump into the article here. So pretty much this article came out and they pretty much said this, that right now home prices are down about 18.9% compared to last year. Not to mention, this is the slowest pace since June of 2009. So right after that massive mortgage crisis in 2008, where homes actually just went right down the garbage. We're seeing very similar sales of homes right now. Not to mention, the economist for realtors pretty much said this, that there's simply not enough homes for sale. Now, what does this mean and why is that? One, we're seeing high interest rates, we're seeing high inflation, we're seeing conflict overseas. So all those things in general are just gonna cause the economy to slow down, because that could be a possible looming recession. I understand we're seeing some stock market gains, but the stock market always has a tendency to look more towards the future, right? It's not a representation of the market we're in right now. Not to mention, like I said, I brought up interest rates. Interest rates, honestly, a lot of people love to compare them to like the prime of 2020, 2021, where you could get a rate at 3%. Now you're looking near around 7%. Obviously, this is going to cause people that were looking to buy a home to possibly stay on the sidelines. Now, I get where they're coming from, but you just have to look at previous history. Right now, looking back since 1970, the average interest rate, was extremely high. So right now, we're actually seeing a lower interest rate than the average since 1970. So a lot of people love to say that these interest rates are high. I get it, yes, but you're also comparing them to the lowest rates of pretty much of all time. So these are honestly average interest rates right now that we're seeing. This is the average. So I would expect this to just stay the same. Interest rates are probably going to hover around this for probably the next couple of years. That's just my opinion. But honestly, I really think that if you're looking to possibly buy a house, sell a house, the best mindset that I have when it comes to real estate and buying a home is, one, it's better to have time in the market than trying to time the market. So if you're looking to buy a house but you're sitting on the sidelines, you're going to be just missing opportunities. Because if you're worried about interest rates, what you could do, hop into a house that you like, and then down the road, if the interest rates fall, just refinance your house. You can refinance at a lower rate, and it's going to be a lot better. You'll get a lower payment, and it's going to be a win-win because you're already going to have a home, you're going to have a lower interest rate, and if the interest rates go higher, you're going to be extremely happy that you bought a house. So I think that's the best mindset, the best strategy that I would recommend for people that are looking to buy a house. Now, answering that question of, are we ever going to see massive home prices fall? Probably not. Realistically, right now, what we're in, yes, we're in a buyer's market, really, comparing to a couple years ago. A couple years ago, pretty much everything, you bought was over asking. I bought my house over asking price. That was just the norm. Now, you as the buyer can get a lot more things discounted. You can actually, do like a lot thorough inspections and stuff like that. I think that's the best plan, is to honestly try to negotiate more. And I think that's another really important thing that a lot of people aren't doing. So guys, should we be worried about the real estate market? I'm not. You always have to look down the road. You always have to look long term. All these people that look day to day or even year to year are crazy. If you're looking to buy a house and you're worried about the home price of it tomorrow, you probably shouldn't be buying a house. But anything you do, at least for me, when I buy something, I'm committed to it for the long run. I'm not going to buy something that, one, I don't like, two, that I think isn't worth it. So buy something. If you don't like it, you always can sell it. Two, if you're worried about the interest rates, just refinance it. Not to mention, you know, what we see when it comes to the stock market, it doesn't represent the real estate market at all. So a lot of people love to compare it like, okay, the stock market's doing really well, why isn't real estate doing well? Well, they're not really correlated. You know, the stock market represents individual companies, not really the real estate market. Stocks historically grow a lot faster than real estate, but are also a lot more risky and a lot more volatile. Real estate grows at like 3 to 2% per year on average. You know, we've seen some crazy returns, honestly, over the past couple of years. But so you always have to consider that as well. But guys, that's kind of what's going on with real estate. We're just seeing a lot of volatility. If you're looking to buy a house, honestly, that's the mindset I would go into. But I hope you guys all enjoyed it. I hope you guys learned something. If you guys did, hit that like button, subscribe, and we'll see you guys tomorrow.